Should be good. Hey guys, welcome to the Syndicate. If you're just tuning in for the first time, I'm your host, Matt Ward, angel investor, serial entrepreneur, chief of growth at Coral, and now the guy that's interviewing Nic Wetzler, the interesting guy that we all wanted to have on. Nic's at Augment Ventures. They're focused on pretty much anything awesome. Thanks for coming today, Nic.
Thanks for having me.
I like to do terrible intros because it's real awkward and I give you the chance to share your story. So how did you get here? What's your story?
Yeah, background. So I started at Ford Motor Company early on in my career, and pretty quickly knew that I didn't want to be there over the long haul. I had always been interested in entrepreneurship, just growing up, being a Lego guy, creating, building stuff, and then seeing families as I grew up, who were entrepreneurial, not VC tech stuff, but people who ran their own companies. I knew that's what I wanted to do over the long haul. So, I was working in Ford, knew I didn't want to be there over the long haul. Like I said, I literally bought a book called How to Get into the Best MBA Programs. Try to figure out how to get out of there and go on to the next step. And so I had everything pretty well lined up academically, but I didn't have the right experience. And so I really redoubled my efforts at Ford to try to do something awesome there. And found my way to the edge of the company, ended up helping the company solve a huge problem that was based in something actually pretty simple that people listening to this will probably understand, is the hardware and software teams were simply not talking to each other. So I went to my manager and said, hey, these guys were separated. We're halfway across the company. Why don't we just create like a virtual team, put us all together? I'm sure we can solve the problem. And to her credit, she looked at a young engineer and said, yep, exactly what we should do. And you're the guy to lead the team. So all of a sudden, I'm leading a team trying to help avert a recall and helped roll out a couple new sensors and a couple new control algorithms across the company, which was just the right experience I needed to get the heck out of there and go do something fun. So went to get an MBA, focused on entrepreneurship, clean tech stuff. Had really gotten energized in the kind of like the 05 time frame in the, when clean tech was growing and starting to get real big. So around that time, I knew that's what I wanted to do. So focused on VCs and startups. I ended up meeting the founder of Augment during B School when I was on one of the student-run VC funds there at Michigan's B School. And she called me up a couple years after graduation, said, hey, I'm running this fund. I need some help. Do you want to join me? I said, yep, you betcha.
That is pretty awesome. I imagine that's changed or dictated your focus a lot. What's the situation like now in Michigan? Talk about it, especially you're investing in Autonomy, which is interesting and completely relevant. So talk to me.
Yeah, it's funny too, just to reflect on the autonomous too. When I started at Ford, man, auto was not cool at all. I mean, you got to remember through the 2000s, right? It's social, Facebook, Google goes public, and then everything, here we are 10 years later, coming full circle, and auto's the next big disruption platform. You've got your Ubers, and now you've got your Autonomy. So it's pretty, I actually give the folks around here a lot of credit, even some of the autos. They're pretty often late to the punch on innovation. And I think this time around, they're sensing the level of potential disruption. And so not only the autos, but just the whole entrepreneurial ecosystem, all the supports and the feeders and people who support the ecosystem are really going crazy on aligning themselves to be, if not own the mobility and autonomous disruption, to still be a massive, significant player.
Well, they got cornered and they saw, oh shit, we're not as solid as we thought. Everything went to crap, and then it's like, okay, let's rebuild from that. And it seems like that's happening in Detroit and Michigan. That's at least the perspective I've gotten. I don't know if you have different thoughts.
Yeah, I think that's true. And then just broadly, the entrepreneurial ecosystem is growing quite well, although from a very small base. And so we do invest here in Michigan. One of our best companies, Llamasoft, hopefully we'll be able to talk about that a little bit, is from Ann Arbor. But we invest nationwide, just happens to be where our deal flow takes us. And also I don't think our ecosystem is strong enough to support an area only or a geographic focused fund. That's my perspective.
Okay, interesting. I've heard some great stuff about Midwest focused funds, but I think it also depends on what you're focusing on.
Yeah, I think that's true. Yep. And it's the deal flow network too, the folks that we've invested with, who share stuff with us. And I think some of the Midwest focused people, they're broader than just like the, Michigan, Minnesota, Illinois, Indiana, Ohio type Midwest. They're talking about middle of the country, like not California and not Boston, New York. Everything else is sort of Midwest or middle country.
Yeah, I completely agree. When people tell me like Ohio and West Virginia are Midwest, and I'm like, what the heck are you talking about?
Well, we'll take Ohio, even though we have a little bit of a rivalry with those guys, but West Virginia, no.
Speaking of the rivalry, so you said you were at a student fund. How has that impacted you in terms of, do you guys try to get students on board in terms of deal flow? What's your strategy look like and what you learned from that?
Oh man, learning from it, that absolutely was critical to becoming VC and joining Augment. We ran it. It was a student-run fund led by, at the time, Tom Porter, and he was a fantastic mentor, very successful VC, and so he taught us both the art and the science of investing. So this wasn't a prof-run class. It wasn't. This was real hands-on learning. Somebody donated a bunch of money to give students real money to make real investments. And so we took our responsibility seriously, even if we messed up, our LPs weren't going to kill us. But so it was critical to me, to my path.
How do you look at universities now as a VC?
From what perspective is?
In terms of, is that one of your main focuses for scouting deals, or?
We do look at a little bit stuff that comes directly out of university spinouts, whether that's based on university-owned tech or whether it's student startup type stuff. Tends to be too early stage for us. So we keep an eye out, but we don't really do seed or pre-seed deals. We do mostly like late seed or A. And because everybody's definitions move around a lot, we like things that either have first revenue or first revenue is actually in view, which means that your product is ready or darn near ready.
Yeah, it's constantly changing. The runway's constantly getting longer and longer and longer.
Yeah.
Any thoughts on that shift in the overall venture space?
Which shift?
Just in terms of the pre-seed, Series A becoming seed, becoming pre-seed.
Yeah, it's interesting. I think it's different geographically. Like one of the companies that we invested in, their seed round, they didn't even call it seed, they called it A because it was like $3.5 million from some of the big VCs on the coast. And so that was basically seed. So we joined and led the B round, but that was basically an A. They were coming up on first revenue. So, but then again, I think the Midwest or the middle country is still massively starved of capital. So I think that's where you get this extended period where you need to do these pre-seeds and then seeds, and things can tend to drag out before you get enough proof that somebody's really able to put some real money on it.
So what's your thesis? What are you guys focused on, and what have you learned since you've been there?
This is enterprise software, smart hardware, and physical science innovations. And we're looking for things that make a massive impact, are transformative, and they have we like to think of things that change the world for a better place, and invest in things that are going to be big in that. And it's changed a little bit. The first fund, we called it energy efficiency and related IT, and the idea was that post clean tech sort of meltdown, when you can't even say that word, there's still going to be tremendous opportunity in that space. You're going to have software applied to a lot of whether it's workflow platforms, applying SaaS models to the energy industry. So we found a lot of success in that. And looking at Fund 2, we said, we looked across all our investments, and everybody knows that that clean tech and energy investing is really horizontal based. And so we ended up with a bunch of different techs. And so we said, as we want to grow this fund to institutional grade over time, let's be a solid generalist tech fund. That's what we've been invested in anyways. We did everything in Fund 1 from semiconductor technology to SaaS platforms. So we said, let's call it what it is: software, smart hardware, physical science.
And a lot of that would be the not so sexy stuff, the physical science and the hardware. A lot of people say hardware is hard, it's expensive. How do you feel on that?
Yeah, it's funny. We love unsexy stuff that makes money. I don't care. One of our companies is automatic tire inflator pumps for the heavy duty truck industry. So, semi trucks. Those guys are growing revenue. They're getting big name partnerships. Big fleets are turning over. And I just love looking at their total market. It's like in the billions, and their fleets under pilot are in the hundreds of millions. It's fantastic.
I love the non-sexy stuff as well. I built a gardening brand, and that was nothing all that exciting. As long as the non-sexy stuff is good, essentially, as long as you can tell grandma about it, it means you're playing in something that's at least acceptable. And if it's acceptable, then the non-sexy stuff has less competition.
Yep, definitely.
So you're looking at companies. How are you evaluating founders when they're coming in? Do you have some type of set process?
Yeah, we do. Founders is critical, and everybody knows that's one of the critical pieces of the recipe. And for founders, the way we look at it, we like to talk about it, is an uncommon ability to execute. And so, that somebody who has that can take a mediocre idea to greatness. And everybody's seen the great technologies, the great ideas that have been driven into ground by mismanagement. So that's something that we definitely focus on intently during our diligence. And we tend to do our diligence over a longer period of time. If you need money next month, we're not your folks. We usually take, probably 2 or 3 months. And over that extended period of time, one of the things that it allows us to do our diligence deeply, but it allows us lots of interaction with the founders so we can judge them. And then, of course, we're looking for, big markets, differentiated solution. And we focus a lot on competition and how the solution is fares to the market and stacks up against the competition. So those are big buckets.
Okay, I like it. So you've got, there's a little echo. Can you turn it down just a little bit? I hear myself and I have a terrible voice.
Okay.
Yeah, sorry about the slight interruption, guys. No worries. So you're at the fund, and right now you're a principal. We have a wide range. We're looking at angels, we're looking at partners, we're looking at accelerator leads. What does a typical day in the life of a principal at a VC firm look like? Everyone's always interested. People always want to get into VC, and there's always a path.
Yeah, that's interesting. A lot of it has to, no two days are the same, but some of the big themes right now, we're still fundraising. We've had first close, so we're investing as well. So our days are full of both investor prospecting, meeting with potential LPs, and then finding companies. We do a lot of calls. We'll probably do 5 or 6 calls a week with prospective companies, whether they're first in the pipeline or we're diving deep into diligence. And then there's just a lot of reading and research. We spend a lot of time online reading everything from articles to research reports, and trying to find those uncommon founders and excellent solutions that are going to grow big for us. But it's a lot on going really wide so that you can synthesize, and then once we dig into a company, then we go deep. So it's we spend a lot of time floating. It's not really floating, but surveying, reading, trying to get exposed to as many things as we can so that we can dive in when we need to.
Yeah, it's like fishing. You throw out as many lines as possible. You see where you get a bite, and then you start fighting. That's how it works, right?
Yeah.
How do you manage that investor and startup time. It's keep echoing in my ears. I don't know if it's just me. How do you manage the time between those two? So obviously you guys are fundraising now, so it's slightly more focused towards investors. But what's the balance look like, and when does that shift happen?
There is no balance. No, it's no, it's probably about 50-50 on average, probably up to 75% of time spent on fundraising. But it ebbs and flows over the week or the month.
Okay. And when you're meeting with founders, what are your most important questions that you ask?
That's interesting. I think there's we don't have any. I don't think there's anything that's specifically like a big question, but it's the buckets that I already outlined. But one of the things that we like to ask is, instead of just running through the deck or whatever, we want to hear the origin story first, which a lot of times isn't clear in the deck. It's, just like you open the podcast, we do that a lot with founders. Like, tell us how you got here. How did you come up with this? We want to let them kind of go off the pitch script and let their passion shine through if it's there.
If you have to choose between market and founder in terms of which is the most important, what do you choose?
Both. If you're gonna pin me down, I'd say founder.
Founder. I like founder as well. Interestingly, that whole expression, you bet on the jockey, not the horse, is a great way to lose money in horse racing. It's a terrible expression. It's one of those idiosyncrasies that came, or whatever they're called, that came into being that has no actual truth behind it. But it's true. It's startups.
Yeah, that's why I don't bet on horse racing.
I do not bet on horse racing either, or not too much on cryptocurrency. Speaking of which, any opinions, any thoughts?
Yeah, I love the possibility of blockchain, but ICOs are not our bag.
Not my bag as well, although I will say, if you guys are interested, look at Coral.io. I recently joined as the chief growth officer, and we're doing some very interesting stuff funding the 99% of companies that aren't fundable. I can't say anything about an ICO, but you'll find out more information if you go to the site.
We'll keep an eye out.
So what's something that we haven't talked about yet that you would like to focus on?
Yeah, that's a great question. Well, one of the things that we're touting as the Michigan ecosystem is growing, and one of our star companies, Llamasoft, I think that's something that we're proud of being part of, and we're extremely part of that team for executing. Within the last year, they had announced a partnership with TPG Capital for an exit for the company. So they got some nice liquidity. We still have a stake in that as well, so it continues to grow. But it's one of the star companies in our portfolio, one of the star companies in the Michigan ecosystem.
What's the story behind those? The stories are always fun.
Yeah, it was a company, supply chain design and analytics. It's one of those ones that at the beginning you had to squint a little bit hard, because they did help create that market before Llamasoft came along to help people design their supply chains with intention. Supplies decisions were made on a per sourcing decision, and it wasn't made enterprise wide. And these guys brought the design and analytics to do that from an enterprise-wide level.
As someone who's been in e-commerce, the supply and logistics is incredibly important. That is definitely my weak spot. Sorry about the background noise, guys. It sounds like someone's having a train party or something. I want to jump into the lightning round. How's that sound, Nick?
Yeah, it sounds great.
So what's the first investment that you made?
My first investment that I got involved with was Ravio. It's a ultraviolet LED technology company. So that was one of the ones that we did that's deep tech. Their technology is all about how they lay down the active layer on the sapphire substrate and get high optical efficiency. So we dug deep on that one on the diligence, highly technical, but at the highest level, it's pretty easy to understand. It's digital disinfection. Ultraviolet light kills bacteria, and so can disinfect almost anything: air, water, surface. And there's even industrial applications for curing glues and dyes. And so you can it's easy to tell grandma that you use a light source to kill bacteria, and you can improve water quality at scale in third world countries.
That is very cool. Lightsaber for disinfecting.
Yes.
That's very exciting. What outside of Llamasoft, top 2 companies?
Well, we've talked about Ravio. Ravio's doing well. Mercatus is another company that we're really excited about from our portfolio. They make investment lifecycle management software and the original thesis was when you're investing in solar and wind farms, you're doing it at a different scale than you're doing investing in power plants of yesteryear. So you can't use the same diligence tools when you're doing, let's say, 10 to 100 times more projects to deploy the same $1 billion. So you need a workflow management platform, and that's what Mercatus created. End-to-end SaaS platform for managing investing in energy assets. Those originally renewable assets, then they're growing into energy assets, and then once you manage investing or placing capital and an asset base, some of the financial institutions are starting to look at them. So there's opportunity to grow and grow. So we're pretty excited about them.
Opportunity to grow and grow is what we all want to hear.
Yes, especially when they execute on it, which they're doing too.
Yes, when they execute, not just a white paper. What about big misses?
Big misses. There was a company that we weren't able to get funded that, of course I can't name, but we were really excited about it. I think one of the reasons, and it ended up dying, I think one of the reasons was they're trying to do high performance computing out of the Midwest. And we got really excited about the technology and the founders. We just couldn't find the investors who had the appetite for that locally and couldn't get the coast involved. I thought it was big potential for a multi-billion-dollar company, but alas, it didn't happen.
Alas, it happens. It happens. What are you excited about today?
Excited about? I'm excited about autonomous and all the things that are going to be surrounding that. It's a huge potential. It's going to be a huge computing platform once you put all of that on a car. And then I'm especially excited to see the surrounding ecosystem and what develops around it. That's kind of what our specialty is. Finding the unsexy or the cool things that happen in the ecosystem and can be that grow large.
The autonomous ecosystem will be very interesting once you don't need your hands on the wheel and there is no wheel.
Seriously.
So, I also like to flip that over. What's overhyped outside of ICOs, of course?
Autonomous vehicles.
Okay, we got a funny man. Why are they overhyped?
No, seriously. I think some of the valuations are crazy in some respects, driven by fear of missing out. All the autos have to have one, and then some of the big suppliers, they have to have one. It's funny. I looked it up. $1 billion for Argo AI. Let's just use Ford as an example, since that's where I started. From the one hand, so from an investor perspective, I think that's overhyped. Although if we could get that as an exit, I'd think it was justified, of course. But from Ford's perspective, last year they had almost $160 billion in revenue and almost $8 billion in net income. So to spend 1/8 of 1 year's net income, less than 1% of 1 year's revenue to make sure you're not irrelevant. On that side, that's not too high of a cost at all.
Absolutely. I was in Zurich in Switzerland for a while, and you can see they're terrified of blockchain. That's the only thing they invest in because they realize their business model of banking is slightly more complicated now. But completely agree. When your back is against the wall, you just start shooting.
Yeah.
So my next question for you, what blogs, podcasts, resources, et cetera, do you go to on a daily, weekly basis to stay informed?
Yeah, a lot of it I do pay attention to my LinkedIn feed. There's a lot of good stuff that comes across that. Developed a pretty good network of active investors, technology people. I look up Crunchbase is a big one that we keep an eye on. I listen to the Syndicate, of course.
I like the plug.
Yeah. Just getting ready to understand kind of your format. I've listened to a lot of them, so that converted me to a regular listener. It's on my playlist now.
Yeah, I try to get the best investors if only people would find it, because I have some pretty good investors. It's just that whole discovery is slightly more challenging these days.
Seriously. Yeah, and then we do a lot of directed directed Googling. So for whether it's areas that we're interested in, and then specifically when we have companies that we have first interest in come across our desk, we just do a crap ton of Googling and reading all the interesting things that come up.
How do experts play a role if you're doing deep tech? Are you bringing a lot of people in?
Yep, we do. Yep. So we have technologists in our network. We leverage some of our relationships locally with the University of Michigan. So we definitely reached out and had some actual PhDs on our side help us out, make sure that we weren't missing the boat on Ravio and some of the other ones. Like, I can Google molecular beam epitaxy with the best of them, but at some point you need a PhD to help you out.
Yeah, it's that synthesizing information. It all sounds good until you realize the everything behind the complexity is where it matters.
Seriously.
One last question. What would you say is your best productivity hack?
Ooh, productivity hack. That's a good one. Interns.
Yes.
It's great. So we've had paid and even unpaid interns. People want to get into VC, and I think it's if you're a young person, you have the time, especially while you're going to school, seriously call up the VCs and say, I'm willing to work for you for free. We love it, and I think it's a good experience. I love calling up my intern, and there's a company in a space that I don't know well yet, and I say, make me smart on this so I can meet these guys. And they come back with awesome research and help me out.
That is the best productivity hack I've heard so far. That is quite awesome. Thanks. I want to thank you for coming on today, Nic. I know you're a super busy guy. Where's the best place for people to reach out to you, connect you, if they're interested in being an intern, send you an email, all the good stuff?
Yeah, you can look me up on LinkedIn or email me just simply nic@augmentventures.com.
And of course, guys, we'll throw links and everything to the show notes, thesyndicate.vc. You know what to do. If you haven't left a review on iTunes, you're probably a terrible person. Thesyndicate.vc/iTunes. Go and leave a review, guys. And until next time, just go make it happen, crush the coffee, and pound the pavement. Thanks for coming on, Nic.
Thanks for having me.
Awesome.